Dom, thanks very much. So, yeah, luxury retail is feeling a little bit of a pinch lately, an area that's been a standout in this market while other retailers have been soft.
Let's talk about that. Is the high-end shopper running out of gas right now? And if so, how big of concern should that be for investors? Joining us, CNBC retail analyst Stacey Widlitz, and also with us is Mary Eppner, principal at Mary Eppner Retail Analysis. Good to see you both. Stacey, I mean, you know, they're slowing down in Europe, they're slowing down in Asia. I mean, that's a problem for a lot of the high-end luxury retailers, right?
Absolutely. I mean, we saw this period of double-digit growth across the board, and now it's normalized. And also, I think the most important thing you have to think about is it's followed the currency bouncing ball from country to country. Now that the U.S. dollar is weak, the Chinese are shopping in the U.S. They're not shopping as much in Europe as before. So the pie is pretty much staying the same, but the consumer is just moving around and following the easy currency.
Mary, it sounds like the trouble is that for a lot of retailers in the luxury space, it was precisely the strength in Europe and in China that was driving the growth. It was driving the story for these names. So what happens now? What names do you like here, and what's the next phase?
Well, what's happened with these luxury brands is they've made a conscious effort to trade customers upwards. So it's alienating a customer who used to want to buy a Gucci bag or a Louis Vuitton bag. What that has done is it's created a whole new price tier that other brands are entering. So there are a lot of shifts going on. Luxury's getting higher. There's a space being created for brands like Philip Lim and Alexander Wang, $500 to $1,200 price points. Plus, we were just talking, and the men's business continues to be very strong. So there will be some upsets in the next 12 months.
Are those investable names, though, some of the newer? Because it makes me think of a Kors as well, which came into that space and did extremely well. But how do you play that space, which isn't necessarily as public as some of the bigger?
Yes, that's true. What we expect to see happen is that Kors will come out with a higher price line that will address the $500 to $1,000 price point. And also, Stacey and I were just talking about Coach, and we expect to see with Stuart Vevers as the new design director, he is going to offer a higher price look and aesthetic for fall. But we won't see the results of that until the back half of the year, and then hopefully we will finally see Coach turn around.
Stacey, what about Tiffany? By the way, I was reading today, I didn't know this, that their flagship store on Fifth Avenue in New York City, that's 10% of their whole business. Holy cow. I mean, no pressure on one store. But what about their business here in the U.S.? It puts more pressure on it because of that currency play you were talking about.
Yeah. Well, Bill, here's the good news for Tiffany is that if you look at that flagship store, which represents about 8 to 10% of the business, about half of that store is tourism. That's a huge number.
Bet, right?
So as the Chinese are coming in with the weak dollar, guess what? Tiffany comps were up 7%, and that's what all the luxury brands are seeing. They're seeing that customer come into the U.S., so now they're saying, hey, let's open more stores in the U.S., let's open fewer in China.
This is so interesting. It's now, Stacey, would you say it's going too far to perhaps, see some of these names shutter these massive stores in China and Europe they've put so much investment into and are paying such high rents for, and instead redeploying that capital here in the U.S.?
Yeah, I mean, that's the problem. So if we built stores to capacity for, high single-digit growth, and now we're seeing a smaller pie, that's a good point, Kelly. Rents in Europe have doubled for the luxury space in the past 5 years. So if we're stored up and geared up for high single digits, and then the consumer doesn't show up in Europe, they only show up in the States.
It explains a little bit, Bill. I don't know about you, but when you walk around Manhattan, I mean, especially in some of the Soho area, for example, is seeing so much demand. Rents there are increasing so rapidly. Stacey, I've been kind of wondering how this is just sustainable.
Yeah, you're not exactly getting a bargain in real estate in Manhattan right now.
Yeah. Right. Mary, I'm amazed, really, at the strength of it, but perhaps it is reflecting some of this domestic phenomenon.
Yes, it is. The one thing I wanted to mention on the jewelry front is that luxury watches, actually watches at all levels, continue to perform well. That customer has not been impacted. So if Tiffany would actually boost that business a little bit, it could have some long-term momentum. But yes, I agree with you. Back to your topic, yes, I agree with what you're saying.
I saw that. I buy all my watches from those guys on the corner.
That's not what we want to do.
Canal Street.
They tell me they're real watches, that they're the real thing. I don't know.
Yes, of course they are.
Whatever you want to believe.
No one's getting the new Samsung watch then.
Right.
Yes.
Just yet.
Thank you, ladies.
Thank you guys very much.
Thank you.
Tough day for Tip. Well, they did all right, I guess. They managed perhaps to close in the green here.
My watch has stopped. I don't understand.
Yeah.